The retail sector is in focus today after January sales declined more than Wall Street expected, drawing concerns about the health of the consumer as the Fed tries to get inflation down to its 2% target. Now, the consumer has remained relatively resilient for much of the Fed's tightening cycle. Could we now see a pivot as we see rates stay higher for longer? Here with more is Anthony Chukumba, Loop Capital Markets Managing Director. Good to have you on this show here. So, Anthony, break down for us what your biggest takeaways were from this retail number.
So I wouldn't read too much into the retail number, particularly given the fact that retail sales were very strong throughout 2023. I mean, this could be just a bit of a, sort of digestion period after, a fairly strong holiday selling season. But, I'm loath to read too much into one months of retail sales numbers, particularly given, the strong macroeconomic data that we've seen throughout 2023 and even into early 2024.
I mean, it seems like there was a good year-over-year change in one particular area that you do cover, and one area that we're excited to talk to you about, which is kind of this little luxuries, the business of self-care Saturdays or Sundays, whichever day people decide to do that. And you've got to call out on one retailer here, Ulta. Take us into the thesis here and the little luxuries trade. Is it still holding up strong?
There's no question about that. Now, look, it's a little ironic because we did just downgrade Ulta to a hold from a buy rating, but that was really based on valuation. It wasn't really based on fundamental concerns at all. Look, Ulta actually not pre-announced, but they gave some preliminary 2024 guidance when they reported their third quarter results, which is kind of a bold move. I mean, they didn't really have to do that until they reported fourth quarter, and they are expecting comp store sales growth and pretty healthy operating margins. And I think a big part of that is like what you said. I mean, people really want to kind of pamper themselves. And I think in a lot of cases, investors think that beauty products are a lot more discretionary, quite frankly, that they really are, particularly for Ulta's, sort of beauty enthusiast customer base. So we still, even though we downgraded the stock, we still have a pretty strong fundamental outlook on Ulta going into 2024.
And Anthony, I want to ask you about some of the big ticket items, which of course brings in Best Buy. When markets were pricing in, more rate cuts coming earlier, you know that this is something that would benefit one of these big box stores like Best Buy as potentially people decide to move house, have a few more options here. How much does the picture change from here?
It definitely changes. I mean, I think, if we were having this conversation 30, 45 days ago, I think the consensus expectation was that the rate cuts would start in March. Now it's looking more like, May, particularly given the inflation reading that we got that was a little bit higher than we expected. So, I think it will likely push back rate cuts, and we're looking for rate cuts to help with, mortgage rates, which will then help existing home sales, which then help, consumer electronics appliance sales, also consumer electronics sales. So it does kind of push things back.
Certainly. And where, for Best Buy, how does that hamper the turnaround story that you were banking on here for 2024?
Well, I mean, I think turnaround is kind of a strong word. I mean, in terms of controlling what they can control, they're doing a good job of that. I mean, the only thing that really kind of needs to turn around is top line. Unfortunately, that's not necessarily within their control. That is more macro driven. So, as I said, if we have a pushback in terms of lower interest rates and that pushes back, a housing market recovery, that's not necessarily a great thing for Best Buy.
Are you seeing more kind of broadly Best Buy needing to implement a pricing mechanism to actually make sure that they're churning through or just moving through inventory that's been sitting and perhaps stale?
Best Buy, like I said, they're doing a great job of controlling what they can control, and they're really good at controlling their inventory. So we're not seeing them having to do any sort of unusual discounting to work through inventories. I mean, I think that they've been pretty good at managing their inventories. And look, when it comes to consumer electronics, there always is a greater degree of inventory management that you have to do, just to manage the end of product life cycles. Right, there's always going to be a new TV coming out to replace the old TVs, but that's something that they're pretty good at doing. That's not a concern for me whatsoever.
And we know that consumers have been pulling back on those big ticket items. But what about some of these cheaper brands here? If you like a Five Below or a Dollar Tree here, are we still seeing some pullback there as well?
So, I mean, given the fact that the consumer, even though the macroeconomic, sort of indicators and variables are fairly strong, the consumer still has this sort of almost like ongoing dread. And I think part of that is just the fact that even though inflation is coming down, we did have, a couple of years of elevated inflation rates. And so they're still looking to stretch their dollar. And yeah, and one way that they can do that is going to a Five Below, is going to a Dollar Tree. And so, we are seeing that trade down from higher priced retailers to those, sort of what we refer to as deep discounters. And we expect that to continue, certainly early in 2024.
Well, one of the things that's awesome about the work that you and your team at Loop do is you do your own price comps as well at discount stores. Where, for consumers out there that are trying to figure out just where is the best place to buy, where am I actually getting the best deal from a retailer? What have you seen in market, in channel checks?
Yeah, so I mean, generally, the low price leaders continue to be Walmart on the brick and mortar side and Amazon on the e-commerce side. Now, having said that, a lot of the companies that I cover, they have kept their prices very, very competitive. So for example, you mentioned Dollar Tree. Dollar Tree owns Family Dollar, and then there's, Dollar General as well. And what we have found is that Family Dollar and Dollar General prices, they're not quite at price parity with Walmart, but they're usually sort of a low single digit to a mid single digit percentage higher than Walmart. And that's all kind of really that they need to be, quite frankly, because, it is kind of a different purchase occasion. It's kind of a midweek shopping trip. So, a person's just not going to trudge all the way out to Walmart, to save, a low to mid single digit percentage, particularly on a, $15 basket size. Amazon, like I said, is the leader in terms of online. But, going back to Best Buy, what we have found is that Best Buy, is usually within 1 or 2% of Amazon, and Best Buy also will price match Amazon. So, price transparency is as high as it's ever been, right? Everyone has a smartphone. It's really easy to compare prices. You don't have to, drive from store to store to do that. So it is incumbent on retailers to make sure that even if they're not the low price leader, they're at least price competitive or within spitting distance of the low price leader.
And you did mention some of the issues that tend to be raised around inventory, clearly in a very different place than we were 3 or 4 years ago. Which of these deep discounters you think are doing a better job with inventory management?
I mean, they're all doing a pretty good job of inventory management. We really don't see any gluts of inventory like we did. And and remember, with the deep discounters, I mean, a lot of what they're selling are consumable. A lot of it's being sourced domestically. So they didn't have a lot of the issues that other retailers did when the ports got all sort of jacked up. Coming out of the pandemic, due to the pandemic. So they will do a pretty good job of managing their inventories. We don't see a lot of inventory gluts, quite frankly. Usually, the problems that we sometimes see from an operational perspective is that they don't have enough inventory, right? Like we see out of stocks. That's been a major problem, pretty well documented for Dollar General, for example, and something that they're trying to clean up.
Anthony, always a pleasure to get some of your insights and perspective, especially around this entire space. Anthony Chukumba joining us here this morning. Appreciate it.